talking about some of the coronavirus concerns, the Fed comments yesterday. Before we dive into commodities and some of the price activity we've been seeing in energies, what stood out to you in terms of Fed comments from Jerome Powell?
I mean, he's done a good job of walking the line, not really surprising anyone. Just emphasized, again, the fiscal needs to be done, and that really pins where Washington is right now. Yeah. Not so much on his comments, but some of the things we did hear out of Washington yesterday, the White House Chief of Staff, Meadows, not too optimistic about a deal getting done. But then circling back to Powell, he's emphasizing they need more fiscal. So that could have a reason here where the market is sort of on a little bit of a loose footing, some other news as well. But I think he's done a good job at not bringing any surprises. And this is during a time where they don't want to see any surprises.
Yeah, I mean, under unprecedented, economic conditions, he certainly has calmed concerns. And we're seeing a reflection of that in terms of price activity. We always say price is king. Speaking of price being king, it was interesting to see inventories, the large draw that we had yesterday, but not a lot of reaction too in terms of crude. Is this telling us that the focus here is more on some of the economic data, some of the, again, numbers associated with people returning to work, and these weekly inventories right now maybe aren't the best reflection thereof, because we've seen some kind of switches, some shifts in terms of recent production levels as well?
Yeah, you're right. I mean, yesterday's was a big drawdown, much bigger than expected. API alluded to something in that region with 10 million barrel draw on the headline crude. But we saw exports pick up largely last week. We saw refinery utilization jump up a bit. So all that's working to work down those inventories. And yeah, it's the market itself didn't react bullishly. And I think there's a number of reasons there. You got a ton of resistance from that March 6th gap. I mean, you got that from the front month, about 41.5. You got that in September, about 42.5. So tremendous amount of resistance there, and crude just cannot chew through it. What's going to be the catalyst? And then you got OPEC supply, exports from there hitting the market beginning next week. So I think there's some worries there. We're also seeing estimated numbers from the U.S. that production is starting to tick up a little bit. Those estimated numbers in the EIA report are tough to digest and really lean on, but they're showing some consistent belief that you're seeing about 100,000 barrels per day come back online sometime over the last 2 weeks. And that's also weighing on things, because we've been saying here at Blue Line, one of the elephants in the room is you could start seeing some of this being hedged up here and some of this production coming back online. That's what would be risk to the market. Now you're seeing OPEC production come back online. I think that the trend is higher. I just want to be a buyer much lower. I want to be a buyer closer to $34.
Yeah, I remember you mentioned that last time you were on, I think, and we're still really, for the most part, have been sideways since the last time we talked. Let's get into the dollar's relationship with crude a little bit. It's oftentimes looked at. It certainly has been in the last couple weeks. The dollar's been weakening. It's off the extreme lows that we saw this week, but still holding lower levels. This has been, at the very least, helping support crude prices. Would you agree?
Oh, yeah, the dollar's getting burned to the ground here. I mean, it's at 2-year lows. It's lifting commodity prices, and I think that has offset where crude could have pulled back to $37 at least, or some of the other commodities across the board could have pulled back. But the dollar weakness is really driving things, and I mean, I think you're really seeing it just being pressured lower for whatever means. Obviously the Fed narrative, the Washington narrative. I think there's definitely some work being done to really manufacture that dollar weaker, but in turn it's lifting the economy. It's making U.S. exports cheaper. It's really lifting stock prices. It's lifting commodity prices, and it's helping this recovery. But I do think the dollar's a little overdone. And you mentioned what I said last time I was on, that you're seeing crude oil path of least resistance higher. I also noted copper path of least resistance higher. But I do think copper is getting a little exhausted here. I'm actually worked to position in something in copper where I'm using a butterfly put spread in going out off a less liquid month in October, get a little more time on that. But I'm looking for copper to come back in, maybe 275, maybe 280 at least, positioning with a butterfly put spread, a 285, 275, 265 butterfly put spread, but with an extra 265 kicker on the bottom there if this thing falls out of bed. So I think copper is a place that I think it's exhausted. You had the Chile narrative, move it up. I wouldn't really want to fade crude oil, but I do think copper's run its course.
Copper slowing, crude losing some of the momentum to the upside. The indices in a similar situation. Is this a precursor in terms of what we can expect to see for stocks?
Yeah, you know what? We haven't been able to chew through the low, and which there's a tremendous amount of support. I mean, the low through last week, and that really 31.69, 31.83 is a pocket. What I call a rare major 4-star support level, and then in front of that we have a 3-star level, which we're rare to have such strong support so close. But that 31.90, 31.94, and we got to get close below about that 31.70, 31.69 in order to really start getting the ball rolling. The Nasdaq is also has responded. We have a rare major 4-star support there, 10,300. We've had that for weeks, and that's really been since we really broke out. But that's been holding the market together. So a lot of data over through today. U.S. GDP. Don't forget we got Chinese manufacturing data later today. That's also going to move the copper market. But that rally at the end of the day yesterday, and then the reversal. Listen, not every trader's perfect. I thought we had that low volume spike right after the FOMC into about good resistance 31.50, and we started to fade. I thought this thing was going to turn lower and stay lower, and it just didn't. So I stepped aside after trying to fade it late yesterday for a quick trade, and then woke up this morning and it's sharply lower. So it does show you here that there is some weakness out there the sellers are alive still. In our research, we've kept a cautiously bearish trend, and we're not typically bearish. I obviously manage stock portfolios too. We're long stocks. I've been overall in our research cautiously bullish for much of the last few months, but I think we're at an exhausted level here for just a little bit, and value is going to be seen much lower than here.
We're talking commodities, we're talking inventories, and some of the fundamentals here. Let's continue that discussion real quick. One more product, natural gas. We get the EIA today. It's been inching higher, and as some of the demand is starting to come back in theory, we're seeing some warmer temperatures certainly recently as we head into the month of August. Let's talk about expectations there. It has been range bound, though, after coming off multi-decade lows, but still struggling with the $2 level.
Yeah, that low that you mentioned, there's a trend line going back I think about 5, 6, 7 years from the low. So it's a trend line that is moving lower, and that low in June responded off of that. I do think there's some good solid resistance, 195 to $2, but I do expect natural gas to just try and stick its head up there and make a new swing high on this run, and then we probably fall back in a little bit. It hasn't been an extremely exciting market, but I do think there's a little bit higher to go here in this wave, and I wouldn't be surprised to see somewhere in the 220 area at most.